Why does Bitcoin seem to explode every single cycle with absolutely insane growth? I'm talking about those jaw-dropping, life-changing price surges that make headlines around the world. Well, let me tell you, it is not luck, and it's not some random market fluke. There's a powerful combination of factors at play, a perfect storm that builds up and unleashes this incredible energy. Today, we're going to break down the 5 core reasons behind Bitcoin's explosive cycles, so you can finally understand the mechanics behind the magic. By the end of this video, you'll see the bigger picture and understand why so many people are convinced this pattern will continue. So, let's start with the most fundamental factor, the one that's literally coded into Bitcoin's DNA, the halving. Imagine if every 4 years, the total amount of gold that could be mined was suddenly cut in half. What do you think would happen to the price of gold? It would skyrocket, right? That's exactly what happens with Bitcoin. The halving event reduces the reward for mining new blocks by 50%. This dramatically slows down the creation of new Bitcoin, making it more scarce over time. This built-in scarcity is a core feature, not a bug. As supply tightens and demand continues to grow, basic economics tells us the price has to go up. It's the engine that reliably kick-starts every bull run. Next up, factor number 2. The giants are entering the playground. We're talking about institutional money. For years, Bitcoin was mostly a retail game, but now the big players are here, and they've brought their massive checkbooks with them. We're seeing huge corporations, investment funds, and even retirement plans adding Bitcoin to their balance sheets. The launch of Bitcoin ETFs, or exchange-traded funds, has been a total game-changer. It makes it incredibly easy for traditional investors to get exposure to Bitcoin without having to deal with crypto exchanges or private keys. When these institutions decide to buy, they aren't buying a few $100s worth. They're buying billions. This massive influx of capital creates immense buying pressure that can single-handedly push the market to new all-time highs. The third powerful force is something happening in the wider world: loose monetary policy. Think about what's been happening with traditional currencies. Governments around the globe have been printing money and keeping interest rates low to stimulate their economies. But this leads to inflation, which means the cash in your savings account is losing its purchasing power every single day. So, what do smart investors do? They search for a safe haven, an asset that can protect their wealth from being devalued. For a growing number of people, Bitcoin is that safe haven. It's often called digital gold because it has a fixed supply of 21 million coins, which can't be inflated away by any government or central bank. When people lose faith in traditional money, they flock to assets like Bitcoin, driving up its demand and its price. Now for factor number 4, which is all about real-world use. Bitcoin is no longer just a speculative asset sitting on a computer. It's increasingly being used in the real world. We have countries that have made it legal tender. We have major companies like Starbucks and Microsoft through payment processors allowing you to pay for goods and services with it. Every time a new business or country starts accepting Bitcoin, it adds another layer of legitimacy and trust. This growing adoption isn't just a headline, it creates real utility and a genuine demand for the coin beyond just investment. The more places you can use Bitcoin, the more valuable it becomes to everyone. This creates a positive feedback loop. Adoption boosts value, and higher value encourages more adoption. Finally, we have the 5th factor, and it's one of the most powerful forces in any market: human psychology, specifically FOMO, the fear of missing out. Nothing gets people's attention like seeing a number go up, and up, and up. When Bitcoin starts its parabolic rise, the media goes into a frenzy. You see it on the news, on social media, your friends are talking about it at dinner. This massive exposure creates a powerful psychological effect. People who are sitting on the sidelines start to worry they're missing the boat. They see stories of early investors making incredible gains and think, I need to get in before it's too late. This rush of retail investors pouring in creates a huge wave of buying pressure, often pushing the price to its most extreme peaks in a speculative frenzy. So there you have it, the 5 key factors driving Bitcoin's explosive cycles. The programmed scarcity from the halving, the massive firepower of institutional money, and ETFs, the flight from inflation into a safe asset, the growing real-world adoption, and the powerful psychological force of FOMO. It's not just one of these things. It's the combination of all 5 working together that creates the perfect storm for these incredible bull runs. Now I want to hear from you. Which of these 5 factors do you think has the biggest impact on Bitcoin's price? Is it 1 for the halving, 2 for institutions, 3 for monetary policy, 4 for adoption, or 5 for FOMO? Let me know your pick by commenting a number from 1 to 5 below. I'm really curious to see what you all think is the main driver. Thanks for watching, and if you got value from this breakdown, make sure to hit that like button and subscribe for more content. See you in the next one.